It's all manipulated to keep you poor, to keep you believing that everything is fine, to keep you invested. But what if I told you that the only reason the stock market is still standing isn't luck, isn't strength, and definitely isn't growth, but something far darker and far more controlled? What if behind every rally, every record high, and every so-called recovery, there's a silent mechanism holding it up, one that most people can't see, and that very few would even believe exists? Because the truth is, the market we look at today, the one flashing green numbers and celebrating record profits, isn't real in the way it used to be. It's not the reflection of a healthy economy or innovation or progress. It's the reflection of a desperate system, artificially inflated, carefully maintained, and quietly rigged to survive. But only for a little longer. So stay until the end to understand when it will break. Leave a like and let's start. For years now, analysts, experts, and even ordinary investors have asked the same question. How is this possible? How is the market still up when debt is at record levels? When inflation eats away at every paycheck? When companies fire workers while their stock prices keep climbing? How can all of this exist together without collapsing? It defies logic, history, and even basic mathematics. But that's because the answer isn't found in logic. The answer is hidden in manipulation. The stock market is still standing not because it's strong, but because it's being held up like a puppet. And the strings are pulled by a handful of powerful hands, governments, central banks, and institutions so large that their mistakes, their greed, and their decisions decide the fate of everyone else. These are the true architects of this illusion, and their tools are not innovation or productivity, but money printing, liquidity injections, and psychological control. Let's start with the illusion itself. On the surface, everything looks fine. Major indices like the S&P 500, the Nasdaq, the Dow, they're all still hovering near highs. News anchors celebrate this as a sign of resilience. They call it a comeback, a miracle, proof of strength. But look beneath the surface and you find something terrifying. The fundamentals are rotten. Corporate debt has exploded, profit margins are shrinking, and consumer confidence is at historic lows. Yet somehow stocks keep rising. Why? Because they're not reflecting reality anymore. They're reflecting intervention. The Federal Reserve, the Treasury, and global central banks have turned the market into an artificial organism. For over a decade, they've printed trillions of dollars, creating money out of nothing, and funneled it directly into the veins of the financial system. This river of cheap liquidity doesn't go to ordinary people. It doesn't go to small businesses, to savings accounts, or to the average worker. It flows to Wall Street. It flows to asset managers, to hedge funds, to the largest corporations on earth. And when that money reaches them, they use it not to build, not to innovate, but to buy. To buy their own stocks, to buy back their shares, to inflate their prices and make it seem like the market is booming. This cycle is what keeps the illusion alive. Companies borrow money at almost zero cost, use it to repurchase their shares, and drive up their stock prices. Investors seeing prices rise pile in, media outlets cheer, and the cycle repeats. The illusion feeds itself and everyone plays along because as long as it continues, everyone feels richer. But deep down, everyone also knows it's a lie built on borrowed time. You see, the reason the market hasn't crashed yet isn't because the system is healthy. It's because those in control can't afford to let it crash. Not yet. Every dollar printed, every bailout approved, every rate cut made in panic has been about buying time, keeping the show running just long enough to prepare for the next move. Because when the curtain finally falls, and it will, the ones pulling the strings will already be safe. But let's look closer at this hidden support, this invisible pillar that keeps the market from falling apart. It's not just about money printing, it's about manipulation of perception, the illusion of safety, the belief that the Fed will always step in. They call it the Fed put. The idea that no matter what happens, no matter how overvalued stocks become, the central bank will rescue investors. It's psychological conditioning on a global scale. When fear begins to spread, when markets tremble, the Fed simply steps forward, announces new measures, lowers rates, or promises to inject liquidity. Instantly, panic turns to greed again. The market rises, the faith is restored. Just a little break, I opened a free Telegram community where I teach how to earn money with YouTube and build channels like the one you're watching. If you want to understand how to do it, there's the link below. back to before. But this faith isn't based on reason, it's based on addiction. The market has become addicted to cheap money like a patient to a drug. Every dose must be larger than the last to achieve the same effect. Every intervention must be stronger, faster, and more dramatic. And just like any addiction, it cannot last forever. Eventually, the system overdoses. Right now, we are living through the overdose. The government spends more than it earns. The national debt has crossed levels no civilization in history has ever sustained. The only way to keep the system alive is to print more money, and that printing destroys the very foundation of the currency itself. Prices rise, the cost of living explodes, and the average person feels poorer every day. Meanwhile, the stock market still looks healthy because inflation pushes up nominal prices. But those gains aren't real. They're not wealth. They're an illusion created by the destruction of the currency underneath it. Imagine this. You own a house worth $300,000. Inflation doubles prices. Now your house is worth $600,000. You feel richer, right? But your groceries, your gas, your taxes, and your rent have all doubled too. You're not richer. You're standing still while believing you're moving forward. That's exactly what's happening to the stock market. It looks higher because the measuring stick, the dollar, is being devalued. The true reason the market still stands is that it's being artificially levitated by currency destruction and by the psychological illusion that central banks are in control. But they aren't. They're cornered. They've trapped themselves in a situation where any real tightening of policy would cause instant collapse. So they keep the illusion going, knowing it's only delaying the inevitable. This entire structure depends on confidence. Fragile, manufactured confidence. Confidence that the dollar still has value, that bonds are still safe, that the Fed still knows what it's doing. But beneath that surface, everything is cracking. Foreign creditors are beginning to question the system. China, Russia, the BRICS nations are creating alternatives to the dollar. US allies are diversifying their reserves. The foundation is shifting quietly while everyone watches stock tickers, unaware that the very floor beneath them is being removed. And yet the average investor still believes that as long as the market keeps going up, everything is fine. They believe that if things get bad, the government will step in again. They've been conditioned by decades of rescues, from the dot-com crash to the housing crisis to the pandemic, that the system will always bail them out. But what if this time, the system itself is the problem? What if the rescuer can't rescue anymore? Because here's the truth no one wants to admit. Every time they save the market, they make the next collapse worse. Every bailout creates a bigger bubble. Every rescue guarantees a harder fall. And now, we've reached the point where the next fall isn't just another correction. It's the reckoning. You can already see the signs. Insiders are selling. CEOs are cashing out their stock options, while the public keeps buying. The biggest investors in the world are quietly moving to cash, to gold, to hard assets. They know what's coming. They know that this isn't sustainable. That what keeps the market standing isn't strength, but scaffolding. A scaffolding of debt, printing, and psychological manipulation. And like all scaffolding, it eventually gives way. This is the hidden reason the market still stands. Not productivity, not innovation, but fear. The fear of collapse so great that those in control will do anything, to delay it. They will manipulate data, twist laws, ignore losses, rewrite accounting rules, and pretend everything is fine. But they can't do it forever. The truth always wins. And when it does, the fall will be like nothing we've seen before. So let's go even deeper. Why hasn't it collapsed yet? Why are valuations still sky high, earnings still strong on paper, and the index is still rising while the real economy is crumbling? It's because the system is designed to survive on appearance, not reality. What you see every day on financial television, what investors believe is the market, is really just a reflection of policy. It moves not on growth or productivity, but on signals, words, and illusions. A single sentence from the Federal Reserve can move trillions of dollars in seconds. A single hint of a pivot, or stimulus, or support can send prices soaring, even when earnings are falling. The market no longer trades on facts, it trades on faith. Faith that the system will keep supporting it. This is not capitalism, this is theatre. The truth is the government has become the market's biggest customer. Through massive deficit spending, it injects trillions into the economy every year. That money eventually flows to the biggest corporations through contracts, subsidies, and programs. Those corporations then report record earnings. But those earnings are funded by the same government debt that taxpayers will one day have to pay. It's a perfect loop of illusion. The government borrows money, gives it to corporations, the corporations show profits, their stocks go up, and the public, seeing those rising stocks, invests more, never realizing they're funding their own deception. Meanwhile, the Federal Reserve props up this entire cycle with one simple trick: suppressing interest rates. Low rates make debt look cheap, make risk look safe, and make everything seem stable. But what they really do is punish savers, reward debtors, and push everyone into speculation. Because when your savings earn nothing, you have no choice but to gamble. And when everyone is gambling, prices rise. Not because of real growth, but because everyone's forced into the same crowded trade. And now, this trade is reaching its end. Interest rates can't rise without breaking everything. Debt levels are too high, both for governments and corporations. Consumers are stretched to their limits. Yet inflation remains high, meaning the Fed is trapped between two disasters: keep printing and destroy the currency, or stop printing and destroy the market. Either path leads to collapse. The only question is, which one they'll choose first. The illusion can't last much longer because the pressure beneath it is growing unbearable. Banks are holding mountains of bad debt. Real estate markets are trembling. Bond markets are showing cracks. And yet somehow stocks remain high. Why? Because the system's managers are still buying time. They're delaying the pain until they're ready to unleash it. Oh, I want to remind you that if you want to build a YouTube channel like this, I can help you in my free Telegram community with the link below. This has always been the pattern. Every crisis, every collapse, every unforeseeable event, it always happens at the moment most convenient for those who control the levers. They let the market run wild while they accumulate, and they crash it when they're positioned to profit. The dot-com bubble, the housing crash, the pandemic crash, they were all, in their own way, controlled demolitions. And this one will be no different. The difference this time is scale. The stakes are higher, the numbers larger, the distortions deeper. Never before in history has so much money been printed, so much debt accumulated, and so much trust placed in the hands of so few. The system has been stretched beyond recognition. And the reason it's still standing isn't because it's strong, it's because it hasn't been allowed to fall yet. When that moment comes, it will look like chaos. The media will call it unexpected. Experts will act shocked. Politicians will blame each other. But make no mistake, it will be deliberate. The collapse will come only when it benefits those who control it. And when it happens, the same people who built this illusion will tell you they didn't see it coming. They'll appear on TV, they'll demand new bailouts, and they'll promise new reforms. And the cycle will begin again. But for ordinary people, for those outside the circle of control, the damage will be real. Retirements will vanish, savings will evaporate, jobs will disappear. And for the first time in generations, many will realise that the market wasn't built to serve them, it was built to use them. This is why the title matters. The hidden reason the stock market is still standing, but not for long. Because the truth isn't just that the market is overvalued or that a crash is coming. The truth is that the market is being kept alive on purpose for as long as it serves those in power. When it no longer serves them, it will be sacrificed. That's why every time you see the market rise despite bad news, every time you see headlines celebrating resilience while everything around you gets more expensive, you should remember, it's not resilience, it's resistance against reality. It's the system refusing to die because those who feed on it aren't done feeding yet. And here's the final twist. When the crash finally arrives, it won't be the end. It will be the reset. The moment the same people who caused it will step forward with solutions. Digital currencies, centralized control, new systems of surveillance disguised as safety. They'll tell you it's progress, that it's protection, that it's necessary to prevent future collapses. But it won't be protection. It will be capture. The next evolution of the same system. Tighter, more centralized, more controlled than ever before. The market still stands today because it's useful to them. But when it stops being useful, when the next phase begins, it will fall. Not by accident, but by design. And when that day comes, the only ones surprised will be those who believed the illusion was real. So if you're watching the market right now and wondering how it keeps defying gravity, how it keeps surviving every crisis, every scandal, every warning, remember this: it's not defying gravity, it's just floating in an artificial sky. And when the machine that keeps it suspended finally shuts down, the fall will be fast, silent, and absolute. The hidden reason the stock market is still standing is because the collapse hasn't yet served its purpose. But when it does, when breaking the system becomes more profitable than saving it, the strings will be cut, the illusion will end, and the truth will finally be revealed. And when that happens, it won't just be a market crash. It will be the end of an era. But not for you if you smash that subscribe and like button. Let me know your thoughts in the comments. And I also want to remind you that if you want to build a YouTube channel like the one you're watching now and make money from it, I opened a free Telegram community with the link below. See you there or in the next video. Just a reminder, I'm not a financial advisor. This video is for educational purposes only, and any results depend on your own decisions and actions.